Welcome to Forex Trend Atlas. Each weekend, we focus on the big picture, from the quarterly down to the daily charts, using well-known technical tools. Now, let's begin with this week's outlook. Before we start the chart analysis, here's a quick notice for this week. The United States will switch from daylight saving time to standard time next week. Trading sessions will start 1 hour later in GMT. Please keep this in mind for your trading plans. Now, let's begin with the quarterly chart. Here is the quarterly chart of USDJPY, also known as the 3-month chart. Since 1987, the pair had been in a long-term downtrend. That trend was eventually broken, and after reaching a major high near 161, price has pulled back. I see this as a range phase following the previous downtrend. On this long-term time frame, the key level to watch is around 121.5. The market has lost direction for now, but if price breaks above 161, it would confirm a new long-term uptrend and could lead to a strong bullish phase. Next, let's move to the monthly chart. Here, we can draw an ascending channel. Since reaching 161 in July 2024, upward momentum has slowed, but strong buying pressure continues to appear around the 140 level, where price has repeatedly bounced. Until recently, this structure could be seen as a possible head and shoulders pattern, with the neckline near 140, the shoulders around 151, and the head at 161. However, the October candle closed near 154, clearly above 151, which invalidates that pattern for now. At present, the market seems to be moving within a broad range between 140 and 161, inside the long-term ascending channel. It's important to note that on the monthly scale, price is positioned in the upper half of the channel, indicating relatively high valuations. We'll look at the finer price movements on the weekly and daily charts next. Now, let's look at the weekly chart. An ascending trend channel can be drawn here. Since July 2024, highs have been gradually declining, forming a downward trend line within the broader uptrend. As I mentioned in last week's video, price ended near the intersection with that downward trend line, a key resistance area watched by many traders. If price pulls back, support may be found near 151, which aligns with the 23.6% Fibonacci retracement from the April low. Below that, the 38.2% retracement near 149 marks the next support. A deeper correction could reach 61.8% near 145.5. If price drops below this, caution is advised. On the other hand, if price breaks above the descending trend line, the next upside target would be around 158, a level that was significant toward the end of 2024. Now, let's move to the daily chart. On this time frame, we can draw an upward trend line starting from the April low. Last week, price clearly broke above the recent high at 153.3, and even touched above 154 before closing the week near that level. The next potential resistance can be seen around 154.8. While price remains above the yellow 200 SMA, the moving average still slopes slightly downward, implying that some degree of correction may still occur. Specifically, the 38.2% retracement near 151, and the 61.8% retracement near 149, are being watched as possible pullback zones. If a deeper correction takes place and the green upward trendline breaks, it would increase the likelihood of a larger decline, so traders holding long positions should stay cautious. Overall, the 151 level stands out as a key cluster zone. It aligns with both the 23.6% retracement on the weekly chart and the 38.2% retracement on the daily chart. Many market participants are likely focused on this price area. In the short term, we may see minor corrections, but the broader trend remains upward. This is an important stage where short-term momentum may soon align again with the longer-term uptrend. Let's stay focused and avoid being swayed by short-term volatility, keeping long-term analysis in mind as we approach the market this week. Thank you for watching today's analysis. If you found it helpful, please subscribe and click the like button. Let's continue to approach the markets with patience and discipline. See you in the next outlook.